Hey, good morning, everybody. This is Chris V out here in Hawaii, doing the Monday London Open analysis for April 15th. This one's going to be a little bit longer because I'm going to go through step by step here and really show you how I'm going to analyze it. So I haven't looked at any of the data, and I want to do this from scratch today. You know, it's really good to maybe go in a little deeper at the beginning of the week just to kind of get any kind of developing themes that came from last week. So the first thing that I'm going to do is let's go look and see at the market wrap and see um, what happened at the end of last week, so we have a better idea on kind of what we're dealing with going into today. So the weekly wrap is really the good, the good piece that you want to pick up. It gives you kind of a quick little recap. You can kind of see here on the DAX, the Aussie, etc. So DAX revived risk appetite over the last session of the week, and order-driven moves elsewhere have weighed on the dollar, especially against the high beta Aussie and hence in euro, hence 97 status. After the latest Fed minutes on Super Wednesday, above forecast PPI and a fresh cycle 50-year cycle low in weekly claims, the index is slipping to fresh week-to-date lows at 96.74. Mitch, broad U.S. dollar losses versus G10 bar, the even more safe haven yen. So U.S. had good data last week. Nothing really is throwing me off the scent of a bullish dollar right now. So I'm bullish dollar. Aussie, major beneficiary of improved risk sentiment ahead of the weekend. Chinese trade data did show a much wider surplus on exports, so that's something to keep in mind. There was a rebound, and there was neutral comments made by the deputy governor, which we talked about in an earlier video. But really, if you look at this, nothing super strong for the Aussie, so I'd look at that as neutral going in, pending some specific Aussie news or U.S. and China fix their trade data problem. New Zealand and Euro, the Kiwi coattailed the anti-Podian counterparts on risk-on off fluctuations, but lagged on the more overtly dovish RBNZ. So the Kiwi still fairly bearish. We do have the CPI coming up, which we'll talk about in a second. So the Euro's putting on a strong performance and reversing more of its midweek ECB-inspired losses to set a new high. So once again, nothing really there pushing it. There was more confident, upbeat rhetoric following Draghi's rather cautious, if not downbeat, post-meeting press conference. And Q&A helped the Euro regain composure. There was a big buy order on the Euro-Yen at Friday's Tokyo fix. That was a merger and acquisition deal. Fundamentally, not really strong for the Euro, but it did prop it up at least temporarily right now. So right now, at least the last day or so, the Euro's been fairly bid. Cable, fresh peaks of the session. Soft, mainly due to the soft dollar, but combination of Brexit relief and optimism after Article 50 was extended again with a flexible leave earlier than October 31st. They rejected the June 30th request, the European Union, excuse me. But another no-deal nightmare has been averted, extra time. So really extra time for May to try to work out a deal here and kind of, work with the government. The loonie, so the CAD kind of trading within a range and really mostly alongside oil prices after last Friday's disappointing Canadian jobs report. And now we'll be eyeing Bank of Canada's lane for potential pointers ahead of next week's CPI data. So we have that coming up, and the business outlook survey. So we kind of have an idea of what's going on. Let's go see what the morning call has to say, and that'll give us the full picture. So once again, I look at the bullets at the top. That recaps pretty much everything that's going to be in the body here. Asian indices are predominantly positive following on from Friday's upbeat start to U.S. earnings season and strong Chinese data. So stocks are strong to start the week. U.S.-China trade hopes bolstered on reports that an agreement has been reached on currency manipulation. U.S. softening demands on surrounding subsidies. So that would be good for the Aussie and even a little bit of the dollar. We have New York manufacturing, Evans. So nothing really strong in terms of red news. We'll look. There are some earnings coming out on Monday for some of the equities, so that could move the markets just a tad in terms of risk on, risk off environment. FX markets, dollar was softer. Recent failure to hold on to 97 level. Positive risk tone, so safe haven demand, so it's positive risk tone. Trump renewed his criticism on the Fed. Green has been kind of benefited. Let's see here. Extended gains. Nordeas went long on the single currency with a target of 1650. So banks are starting to go long on the euro. Firm risk appetite. It highs around underpinned by risk tone. So extent fall in the Chinese, decline in Chinese imports. SMB chairman says he sees no reason to alter monetary policy, but added they are still willing to intervene if required. Okay, so there was a lot of data to look there. Really nothing new for the dollar. I still am bullish on the dollar. The euro, however, I'm going to go to neutral because there was a bearish tone from Draghi, but there was a large M&A deal. So that was from the 14th. Pound is neutral, Swiss neutral, yen neutral, CAD nothing new, and I wouldn't trade this bearish data. And in fact, over the last week, they didn't note this, but there was the Libya deal that hurt oil prices. Well, excuse me, not hurt oil prices. It propped oil prices up because of a fear of a lack of supply. So I'm gonna change this to awaiting new data. I would say the Aussie's neutral as well. Really, it was kind of a mixed bag. I mean, there was strength from China on the exports, but that doesn't really help the Australia because they're looking for ways to import things to China. New Zealand, we're still awaiting data. So if you look here, the only thing that I have really bullish is the dollar. Everything else is neutral. So no new trades today. If you look at Forex Factory, let's see what we have. So in the U.S. session, Jerry should be able to knock this out. We have the business outlook survey for the CAD, and then later in the day for the Asia session tomorrow, or later today, meeting minutes for Australia, and then average earnings. So going to my chart, so I was in a Euro US short, and you can kind of see it's just sticking around here, but it seems like there's a gathering momentum for the euro. So what I'm going to do is I'm just going to go ahead and take my loss on this. I mean, it's real minimal, but it's kind of just sitting there, and I don't really have confidence with the sentiment the way it is right now that we're going to get another test of the lows here. It just seems like there's been a campaign building here for better euro outlook. So it's better to take a small loss and fight another day. I mean, this is a really small loss. We're talking maybe 0.1, 0.2. But let's wait and see how this week plays out before we test the waters again. I'm sure there's going to be plenty of good moves to make here. So that's all I had, guys. Any questions at all, go to the trading room on Skype, and happy to chat with you there. Thanks.